Hi, I'm Tom Lydon here in Hollywood, Florida at the Inside ETF conference here with VanEck, CEO of VanEck. Great seeing you, Jan.
Good to see you, Mr. Hollywood.
Another great conference, always a lot of fun, but there's a lot going on too, especially a lot going on in China these days. You've spent a lot of time in China in the last few years. Where are the opportunities and where are the headwinds?
Well, I think there are a couple important things about the setting of this conference, right? The big macro trends in China and the US are the two countries that are responsible for almost all of global growth. So you have to check in how both of them are doing. China attempted to do a big crunch down on credit in 2018, and since then they've been doing drip stimulus. Because that is working at stabilizing their economy, don't worry, be happy is my motto for 2020.
Yeah. So are you feeling trade talks are starting to come along? Are we going to see some positive upswing in the economy over there? Or is sentiment going to increase? I mean, people are looking for some green shoot.
I think trade mattered way more for sentiment than reality, because I kind of say there's two types of economies in the world: trading or island economies, and big continental economies. So trading would be like the Dutch, the UK, Singapore, Hong Kong. They're very reliant on trade. China is such a big domestic economy like the US. Trade hasn't even contributed to their growth over the last 5 years. So that's why, but psychologically, like you said, and flow-wise, it was huge. Hopefully, I think that will reverse after the coronavirus thing blows over earlier this year.
So central banks have a big weight on markets around the world today, a lot more than they have in the past. What's your take on that?
Yeah, I mean, look, we're 10 years into central banks really supporting financial markets, and a year ago, right, almost to the day, was when the Fed did the 180 and said, oh, we can't be raising rates too high, you know, we have to back off. So again, don't worry, be happy. If the central bank is going to support financial markets, we'll have jiggers, we'll have ups and downs, we'll have minor corrections, but macro, stay fully invested. That's our message to our clients.
Finally, emerging markets, there's some great value, and you folks have done a great job both on the equity side and the fixed income side overseas. We're starting to see some flows, more flows on the EM side. Do you think that'll continue in 2020?
I hope so. I hope so. It's been a long decade.
Yeah.
If you think about China, equities are flat over the last 10 years. Flat. Yeah. Compared to US. We like to cherry pick the companies that are growing at super high rates of speed. Actually, you know, our esports ETF is a lot of Asian participation in esports, so that's benefited. So there's a lot of high growth stuff happening. You just have to tap into that in your portfolio.
Yeah, pick your spots.
Yeah.
Great seeing you, Jan. Thanks.
All right, Tom, thank you.